Advanced Micro Devices is currently trading at $235.56, which is a stunning surge of $24.05, or 11.37% in today's session alone. Now, the immediate reaction for anyone watching this incredible move is to attribute it purely to the broad AI frenzy that has gripped the market. The expectation is simple: a rising tide is lifting all semiconductor boats, especially those with a plausible AI story. But the reality of a single-day double-digit percentage gain like this is far more specific and tells us something crucial about the shifting power dynamics within the high-performance computing sector. This isn't just a market echo, it's a direct and powerful response to whispers turning into confirmations about major enterprise adoption of AMD's newest AI accelerators. While the crowd sees a stock riding the coattails of Nvidia, the deeper story is about a calculated pincer movement on the market, one focused on custom solutions and open-source software that is finally starting to bear significant fruit, forcing a fundamental repricing of the company's future earnings potential. The common belief, the one you'll hear repeated constantly, is that AMD is locked in a perpetual and unwinnable war with Nvidia. The narrative paints AMD as the scrappy underdog, always a step behind, forever trying to close the gap on Nvidia's dominant CUDA software platform. And for years, that narrative held a lot of water. Investors, whether they were managing their own portfolios through a Fidelity brokerage account or using a more guided solution like Schwab Intelligent Portfolios, priced AMD with a built-in discount, acknowledging its number 2 status. But today's explosive move fundamentally challenges that entire premise. The reality is that AMD isn't trying to out Nvidia. Instead, it's executing a brilliant flanking maneuver. Major cloud providers and large enterprises are growing increasingly wary of being locked into a single supplier ecosystem, no matter how good it is. They are actively seeking viable alternatives, and AMD, with its Instinct MI300X accelerator and its open-source ROCm software platform, is presenting itself as not just a viable alternative, but an attractive one. The significant buying pressure we're seeing today isn't just retail enthusiasm from users on platforms like Robinhood, it's the institutional players, the ones using sophisticated platforms like interactive brokers, recognizing that AMD's path to capturing 10%, 15%, or even 20% of the AI accelerator market is becoming clearer and more probable with each passing quarter. Let's break down the mechanics of this recent stock movement because it's fascinating. The trading volume today is exceptionally high, far exceeding its daily average. This isn't a quiet drift upwards, it's an aggressive accumulation. This suggests that large buy orders are being filled, indicative of institutional funds establishing or adding to major positions. When a stock like AMD moves this sharply, it often forces a reevaluation from quantitative funds and algorithmic traders, which can amplify the initial move. This is different from the trading patterns we might see in, say, Apple stock, which tends to be more gradual, or Tesla stock, which is often driven by sentiment and headline news. AMD's jump feels more structural. It's a reaction to the growing evidence that its data center segment, the crown jewel of its growth story, is accelerating faster than previously modeled. The last earnings report was solid, but the guidance was what truly mattered. Lisa Su and her team projected a very strong ramp-up for their AI chip sales throughout the year. At the time, the market was cautiously optimistic. Today's price action suggests that caution is being thrown to the wind. The market is now pricing in a scenario where AMD not only meets that guidance, but significantly exceeds it. This is the kind of momentum shift that self-investing enthusiasts look for, a moment where the market's perception of a company's future pivots dramatically. What AMD actually does is design high-performance microprocessors for a variety of markets. It operates a fabless model, meaning it designs the chips and then outsources the incredibly complex and expensive manufacturing process to dedicated foundries like Taiwan Semiconductor Manufacturing. Its business is broadly split into a few key segments. The client segment includes its Ryzen CPUs and Radeon GPUs for desktop PCs and laptops, competing directly with Intel and Nvidia. The gaming segment covers its semi-custom chips that power consoles like the Sony PlayStation and Microsoft Xbox, a very stable and profitable business. But the segment everyone is laser-focused on is the data center. This includes their EPC server processors, which have been brilliantly executed and have steadily stolen market share from Intel for years, and now the Instinct series of AI accelerators, designed to compete with Nvidia's H100 and B200 GPUs. This is where the multi-trillion-dollar opportunity lies, and it's the engine behind the stock's recent performance. The company's journey from the brink of financial collapse about a decade ago to its current position as a technological leader is a testament to sharp engineering focus and brilliant strategic leadership under CEO Lisa Su. Looking forward, the tension between expectation and reality will continue to define AMD's stock performance. The expectation is that AI is a winner-take-all and that Nvidia's lead is insurmountable. The reality is that the market for AI computation is so vast and growing so quickly that it's not a zero-sum game. AMD's primary catalyst is the successful deployment and adoption of its MI300 series chips. We are looking for confirmation from major cloud providers like Microsoft, Meta, and Oracle that they are not just sampling these chips, but are deploying them at scale. Each announcement of a new major customer win or an expansion of an existing partnership will act as a powerful catalyst for the stock. Another significant opportunity is the emergence of the AI PC, personal computers with dedicated neural processing units to run AI applications locally. AMD is in a prime position to capitalize on this trend with its Ryzen AI processors. This is an area where investors using online investing platforms like SoFi Invest can see tangible product differentiation. However, there are undeniable risks on the horizon. The most significant is execution. AMD must deliver its products on time, at performance, and at scale. Any hiccups in the supply chain or delays in their product roadmap could severely damage credibility and stock momentum. Competition remains fierce. Nvidia is not standing still. It is an aggressive and relentless innovator. Intel is also working hard to re-establish its manufacturing and design leadership with its Gaudi line of accelerators. Investors must also be mindful of macroeconomic pressures. The semiconductor industry is cyclical, and a global economic slowdown could impact demand across all of AMD's segments, from PCs to data centers. And finally, there's valuation. After a move like today, AMD stock is not cheap by any traditional metric. It is priced for exceptional growth, which means any failure to meet these lofty expectations could lead to a sharp pullback. Thinking about this from the perspective of someone building a long-term portfolio, perhaps using tools from Fidelity Wealth Management, it becomes a question of whether you believe in the long-term strategic positioning over the short-term valuation hurdles. Comment below, what do you see as the biggest risk for AMD stock over the next 12 months? Competition from Nvidia, a potential market slowdown, or execution stumbles? In conclusion, today's spectacular 11.37% gain in advanced micro devices is far more than just a ripple in the AI wave. It's a seismic event that signals a potential shift in the competitive landscape. The market's long-held expectation of AMD as a permanent runner-up is colliding with the reality of its strategic success in the data center and its intelligent positioning as the essential open-source alternative to a a closed ecosystem. While the immediate surge is exciting for those active in online stock trading, the real story is about the long-term validation of a strategy years in the making. The company has successfully moved from being a participant in the PC and gaming markets to being a critical enabler of the entire artificial intelligence infrastructure. The risks are real and the valuation is demanding, but the opportunity is immense. The narrative is no longer just about catching up to Nvidia, it's about carving out a massive, profitable, and defensible territory of its own in the most important technological expansion of our time. Disclaimer: this video is only for educational purposes and not financial advice. Do your own research, DYOR, before investing or donating.